Good evening, this is Mike Taylor and welcome to Rancho Santa Fe Market Talk. We are going to look at the Rancho Santa Fe real estate market this last month and get an idea of how our market is performing. I hope you can hear me okay. I had a little technical difficulties trying to get into the phone system as opposed to the audio on my computer, so hopefully this is coming across okay, and if it isn't, I apologize. When we start our show today, again, let me just see if I can go from the beginning here. Again, this is Mike Taylor. This is our Rancho Santa Fe Market Talk on November the 1st. What I'd like to do is kind of run through the year-to-date through the 15th of October for all of the Rancho Santa Fe home sales in all of our communities. We've been very blessed through the 15th of October in that we have had 176 transactions that have occurred so far this year. And if we look at this line right here, hopefully you can see it with the arrow, you see that we've had 26 closings through mid-October on the under $1 million price point, and we've had 70 between the $1 and $2 million price point, and we've already hit almost what we did last year between the $2 and $3 million price point. Now, what's going to be very interesting, if you look at the 11 pending sales this year, we're actually going to end up with more sales in the $2 to $3 million price point in 2011 than we had in 2010. If we go down to our 2000 or the $3 to $4 million price point, it looks like we're going to have about the same number, maybe one or two more. Where we start to slide a little bit compared to our last year's experience is in the over $5 million mark. So far this year, we've had over $5 million. We've had 7 sales through mid-October, where last year, over that same $5 million mark, we had 16 total sales. So with only 2 properties currently in escrow, and I know this one in this price point here is a short sale, I think we're going to end up with maybe about a third fewer sales over the $5 million mark than we had last year. So people are still a little bit reluctant to go on the really high side, although those who are getting some great deals. It looks like we're going to end up with approximately the same number of sales in 2011 that we had in 2010 in the market overall. Just to go down to our under and over $3 million pricing point, we can see here again that we've got almost a 5-to-1 ratio between the number of sales that are over $3 million, which is 30 out of the 176, and 146 under the $3 million mark. When we go to the listing side, right here, there were 150 of those sales there are 150 properties actively on the market under $3 million, and almost that number, 130 of our properties that are on the market are priced over $3 million. Again, there's still a disconnect with this ratio right here. Oops, let me go back here. There's still a disconnect with this ratio right here of almost 1-to-1 compared to 5-to-1. And what most economists will tell you that when you have this level of inventory compared to this number of sales, that you continue to have downward pressure on pricing. Let's take a look quickly at our community of the Covenant because we've already had 62 sales that closed through the end of October of this year, and that compares to a total of 70 sales that we had all of last year. We do have 7 properties in the market. So, it really looks like we're probably going to end up with at least the same number of sales we had last year, if not maybe 1 or 2 more. Again, if we start to look over this $5 million threshold in the Covenant, last year we had 8, 9, 10 total sales over $5 million. But in the covenant this year, we've had exactly 5 closings, and we do have 1 other property in escrow. So just like the broader market of Rancho Santa Fe, the covenant of Rancho Santa Fe appears that the number of transactions over that $5 million point, again, is going to be lower. The ratio of under and over $3 million sales here is not as bad as the 5-to-1 ratio in the entire market, but we're sitting here at about a 3.5 to 3 3/4 homes under 3 versus over 3. And again, this is where we have another real disconnect, that with this ratio of 48 under and 14 over, we actually have more listings in the covenant that are priced over $3 million than we have that are priced under $3 million. And what that means, again, is that we're expecting downward pressure on pricing. If we go to Fairbanks Ranch, again, we've closed 27 sales through October 31st of this year. And looking at, again, in this case, the over 3 and under $3 million numbers, Fairbanks has had 7 of our 27 sales this year have been over $3 million. Actually, the majority of those have been between 3 and 4. We've actually had no sales over $4 million in Fairbanks. Last year we had a total of 11 sales over $3 million. Unless something kind of accelerates this year, it looks like we'll have fewer sales in the over $3 million mark than we had last year. If you notice, we had 43 total sales last year in Fairbanks Ranch. This year so far we've had 27 closings. It looks like we're probably going to have fewer sales this year in Fairbanks than we had last year. And if we look at where the price point differential is, we look at the under $2 million pricing threshold. Last year we had a total of 18 sales. So far this year we've had just slightly over half that amount. So in this particular case, we're going to end up, again, with fewer sales under the $2 million mark. We're going to probably end up with fewer sales over the $3 million mark. And right in here, the sweet spot of $2 to $3 million, my guess is we'll end up with a couple more sales than we had last year. Moving on to the bridges. The bridges, we've had 5 villa closings this year in the bridges. 3 of those closings have been under $3 million, or under $2 million, sorry. And 2 of them have been over $2 million for a total of 5. We've had 2 Corteil sales that have closed this year, and we've had a total of 3 custom homes that have closed this year. Unlike both Fairbanks and the Covenant, the Bridges does not have anything that's marked pending or being in escrow in their inventory of 24 homes. We still have 16 custom homes on the market compared to our sales volume this year of 3. Of those, we have 6 of them between $3.5 and $4 million, and we've only had one sale within those price points. So again, what that would tend to say is that at the current pricing of our custom homes in the Bridges, that it really has stopped demand. We had 7 total closings of custom homes last year. We've had 3 through the end of October of this year. In 2009, we only had 3 total as well. So unless something sells and closes by the end of this year, we're going to end up at or just below the lowest year that we had, which was back in 2009. Again, what that says economically is that we continue to have downward pressure on pricing. Our next chart here, and I do this in all of my webinars, but this just kind of shows what the market share has been in terms of the companies and their total buyer and seller representation in all of these communities that across Rancho Santa Fe. And we have 3 communities, Crosby, Rancho Pacifica, and Santa Luz, that because of their pricing levels, we tend to compete with them on price points here in Rancho Santa Fe. So these are buyers that, if we go back to 1997, 1996, these buyers we got in Rancho Santa Fe, but with the advent of these new communities, the buyers have been spread out over a larger geographic area. But what it shows here is that Prudential is still the leading company. They've represented almost 26.5% of all the sellers and 25% of all the buyers. And pick your favorite company here, and hopefully it's Prudential, but you can see that where the companies have actually stacked up through the 30th of September. This other category called All Others right here, this is a lot of smaller companies, onesies and twosies, that kind of move in and out of the ranch, don't have really any presence here or anything of that nature, but they do in fact represent both buyers and sellers. So this is kind of interesting as well. I want to move on to something else, and CaseShiller, who comes out with their reports almost on a monthly basis, but there is a lag time in terms of what they're reporting. But their last report, which came out in September, which actually goes back to the July period, actually shows some interesting movement in the greater San Diego market. And one of the things that they showed that between June and July, prices were actually up 0.01%, which is kind of interesting. The year-to-date downward pressure on pricing based on this CaseShiller index, and again, this was through the end of July, was 5.9%. And what they're saying is that that level of pricing that we're experiencing now in San Diego County as a whole is at the same level that our pricing was in December of 2002. They say that the peak month of pricing in our county was November of 2005. And the price decrease from that peak of November 2005 is that we're down 38% in the 68 months since November of 2005. And again, the reason it's 68 is because it's through July. Now here it just talks about the lower tier, the mid-tier, and the high tier, and this has to do with where you draw the lines in terms of the total number of transactions in order to get your tier levels. But what this shows is that if we're down, as this says, 38% in 68 months, and our year-to-date down is 5.9%, the good news is that our downward pressure on pricing is lessening, and in fact, the median prices, and the median prices is where you take the total number of transactions and you count them up and you draw a line right in the middle, or where 50% of them are. And so the median prices were actually up that 1%. Now, many of us are sitting here, and I know that I talk to an awful lot of people who say, I just want to wait for the market, I just want to make for the market to come back, etc. And I have to say that the one thing I'd like to stress for all of us is we have to be positive. No matter what we're going through, things always get better. If you look at the depths of some of the things that we went through in the Great Depression, if you look at our world wars, if you look at Vietnam, if you look at all the things as a country that we have gone through, it always gets better. So things always get better, and I want to emphasize that fact. I'd like to take this opportunity again to thank you. I know I'm cutting it short today, and I apologize for that. But thank you so very much for being with me today. I really, really do appreciate it. Sorry about that. I don't know. Attendees still on hold.
The broadcast is now starting. All attendees are in listen-only mode.
Welcome, this is Mike Taylor, and it appears that I've done almost this entire webinar without having clicked the right button. And for those of you who are still with us, thank you for being here. I'm going to go through this. I'm going to go through this again, and hopefully I'll do it kind of quick. But this is Mike Taylor. I am still, as many webinars as I've done, I'm still not very good at them, and I apologize profusely for that fact. But I do want to go through this stuff so we can so that we can take a look at it. If we look at our year-to-date sales this year, we've had 176 sales. Compared to 215 last year. This was through mid-October. And these numbers I do through mid-October, quite frankly, because that's when my deadline is for my Premier Magazine publication and the article that I write there. But the good news is that we're on track for about the same number of sales this year that we had last year. I wouldn't be surprised if we don't end up with, 5 to 7, maybe even 10 more than we had last year. And if you look at this chart, that means it'll be the most we've had since the year 2006. So that's a pretty nice little bounce off of our low of 148 in 2009. The one area that concerns me a little bit is that we've only had 7 transactions close over the $5 million mark, and we only have 2 in escrow right now, one of which was a short sale. And who knows when that's going to close and at what price. But last year we did have 16 total sales over that $5 million threshold, and this year we're not tracking to that amount. Looking at the covenant really quickly, we're already up to 62 sales through the end of October, yesterday, compared to 70 for all of last year. We do have 7 properties in the market. But once again, that over $5 million threshold, we've had 5 closings so far this year. There's 1 property in escrow in that price point, but we had 9, 10 closings last year over $5 million. So we're not tracking quite as rapidly as we did last year. Where we're tracking on a price point basis is that the $1 to $2 million price points are tracking a little faster. And that is that we've had 29 closings already through the end of October. There were 27 total last year. We're also tracking at a higher pace in this $2 to $3 million price point as well. And we're just about equal to what we were in the 4 to 5 and just about equal in the 3 to 4. So we're dropping down in the under 1 million. We are going to drop down in the over 5 million. But this area in between, we are actually picking up just a little bit. And looking at Fairbanks quickly, we've had 27 closings through the end of October. There were 43 last year. We've had none over 4 million, where we had 2 last year. We've already had 7 that have occurred between the $3 and $4 million mark, with 1 in escrow. And again, where our number of sales is declined in Fairbanks is the $1 to $2 million or under $2 million price point. We will end the year this year with probably 35, 37 sales compared to 43 last year, and hopefully that's not bad. I'm not at all displeased with that. Moving quickly to the bridges, on the villa product or the villa homes, we've had 5 closings this year, and that's really the most we've had since 2008. We have 5 on the market right now, none in escrow. In the bridges right now, of the 24 listings that there are, active properties on the market, we do not have any that are recorded in the MLS as having been sold. So right now we don't have any open escrows. We have 5 villas for sale, we have 3 quartiles for sale, and we have 16 custom homes for sale. We've only had 3 closings of custom homes this year, and if you look back historically, you really have to go all the way, you go back to 2009 where we had 3. Unless we get something sold here pretty quickly and closed, we're going to end the year at really the either tied with or the second lowest number of transactions that we've had since the community was relatively new back in 2002 when we had 8. So from that standpoint, we know there's going to be continued pressure on pricing as sellers seek to find the level of the market that brings the buyers off of the sidelines. Our market share report, again, it's the same report I shared last month. Prudential with 26.5% of the sellers, 25% of the buyers. That's really pretty good. Pick your company, as you can see here. All of these have had different percentages of both buyers and sellers. And this kind of gives you an idea of which companies and how much business they're actually doing in closed transactions. And this report also includes our adjoining communities of Crosby, Rancho Pacifica, and Santa Luz. And the reason I included those is because, you know, from a pricing perspective and people viewing properties now, we actually get a lot of people that view kind of cross boundaries. The other thing I wanted to do is just go again quickly over the CaseShiller stats for San Diego. We see that from month to month, and this is really between June and July because that's when this is through, the median prices in San Diego were up by 0.1%. The prices in the county year to date from January 1st through July 31st were down only 5.9%. The total pricing level now, CaseShiller is telling us, is down to the December 2002 levels. They know that the peak of the market was November of 2005, and we are in the 68 months when the market started, or from that peak, the market has actually gone down an average of 38%. You know, I guess the good news is there's an awful lot of stocks that have gone down as a percentage, a whole lot more, but we're still down, you know, that 38%. Despite all of this, you know, personally, I'm always positive. Things always do get better, and I always believe there's hope, because there is. We all figure it out. Things get better. We have regime changes in terms of our political environment. We're all witnessing now the posturing to try to see who is going to have the faith of the American people to lead us out of and back to prosperity again. There's some problems that we're facing that, quite frankly, are deeper than many of the problems that we faced as a nation in my lifetime. But I have no doubt that things will get better. They always do. And personally, this individual continues to have and will always have hope. I appreciate all of you joining me today. If you do have any questions, or if you would like to have the information within this presentation, please just give me a call. My number is 756-5120. My email is mike@michaeltaylorgroup.com. I'd be more than happy to send you this. You can print it out. You can keep it. You can do whatever you want with it. Anyway, I'd like to sign off. I really, really appreciate your being with me today. And again, I apologize profusely because we are having, for whatever reason, some sort of technical glitches. And I got to tell you, I know it's me. But I apologize again. Have a great evening. And you know what? Hang in there. Do not fear. This market will flatten out, and it will come back. It will reach a bottom, and from that bottom, we're going to have an opportunity to rebuild ourselves. Thank you. Good night. This is Mike Taylor. Take care.